start now. Okay, thanks.
Thanks, guys. Thanks everyone for joining, first of all. My name's Dom Hallas. I run Coadec, or the Coalition for a Digital Economy, which is a lobby group for tech startups, based out of Tech Hub, very kindly. And so, first of all, who are Coadec, what we are, and then hopefully I want to talk a little bit today about both the Future Fund itself, and hopefully answer any questions about what we know, what we don't know, what we're still pushing for, what's still under discussion with the government. And kind of timelines and what that might look like, and then also the additional support that's available, but just trying to be as clear as possible as we can about who we think the different bits of support are most applicable for, what the challenges are, what the structures are, etc., etc. So first of all, the Future Fund itself, before we get onto that, Coadec, we're a lobby group of tech startups founded by tech entrepreneurs themselves and designed to be helping the tech community. And we work across a range of issues, from access to talent, so immigration policy and skills policy, to access to finance, so stuff like what we're discussing today, which is how we can make sure that startups are able to access cash, whether that's a sort of robust venture capital market or tax incentives or whatever, right through to the kind of regulatory environment and everything from online harms to the AI strategy. So obviously a lot of those pertinent for the sort of current situation, but most pertinent is how do we make sure we're able to ensure that startups are able to access the kind of support they need to survive through this period. So why is that so important? Why do they need to access support? It's because we're seeing a clear drop off of investment. So the Bohurst data suggests it's down 32% in Q1, but obviously that last month of Q1 in March was the real impact. And so, we would anticipate that we'll see some pretty poor numbers in the next couple of months as well, and potentially, further moving forward. We know that, the wide range of sort of funders of early stage companies in particular, so crowdfunders, angels, micro VCs, EIS and SEIS funds, are just unable to meet the increased demand from their portfolios because so many are requiring big investment and they simply don't have the sort of dry powder, as it's called, available in their funds to be able to support this. So we're seeing a disproportionate impact on the pre-seed and seed stage startups, which is most of you guys in Tech Hub, because we know that the larger funds that have capital available are leveraging that to protect their investments further up the value chain, and so we're seeing some challenges further down. So what does the government's initial economic response look like? So I'll talk a little bit about why, what the scheme looked like before, and then what the startup scheme that was announced last Monday looks like, and the challenges there. So the three main things that had been announced prior to last Monday were the Coronavirus Business Interruption Loan Scheme, the CBIL scheme, the Business Rates and Relief and Grant Scheme, and the Coronavirus Job Retention Scheme, or the furlough schemes now. And I think the main thing to say about these three is that, to be blunt about it, the first two, the CBIL scheme and the Business Rates and Grant Scheme, aren't applicable for the vast majority of startups. So we know that, for startups that are loss-making or pre-revenue, or just, are have revenue but aren't making money, they're likely to fail the viability test from the banks when it came to the CBILs, so you're never going to be able to get one of the CBILs loans. And then when it comes to business rates relief, actually, if you're in Tech Hub and working on fixed desks or in co-working, you actually even though you pay business rates through your membership of Tech Hub, you're not registered as paying business rates. So it's been very, very difficult to identify and then give the money out to you that you actually are technically allowed to have. And there's the government has not created a mechanism to do that, so you're not able to access that cash. And so the only scheme that has been available so far has been the Coronavirus Job Retention Scheme, or the furlough scheme. And the challenge for tech is two things. First, that in general, tech is more highly paid, so the cap at £2,500 a month that the government has brought in doesn't necessarily actually cover the costs of some of the employees that we're talking about. But also that it puts you in the deep freeze for 6 months, right? You're on hold for 6 months while you kind of are putting people on furlough, because it's not, unlike a normal, more established business. To be honest, you don't have the employees that you can furlough and then carry on working. And so we know that all of these schemes are imperfect. And so because of that, we've been engaging with the government an awful lot over the course of the last month and a half on what a potential startup support package could look like. And what the government has ended up coming up with is fundamentally two sorts of distinct buckets that will sit alongside the schemes that I've announced earlier, and then I'll talk a little bit about the additional scheme that was announced this Monday. But those two buckets amount to two things. One is called the Future Fund, which is a £250 million pot of government money that will be matched by private money on a match funding basis. And I'll talk a little bit more about that in more detail. But essentially, it's a private one-to-one matching of capital up to a maximum of £5 million and for a minimum of £125,000. And to be eligible, you need to be an unlisted registered business that's raised £250,000 in outside investment from in the last 5 years. Then there's a separate tranche of money that's gone to Innovate UK, £750 million, 200 million of which is accelerating payments to people who already get Innovate grants or loans, and then another 550 of fresh funding, so new money for R&D intensive projects for both existing customers who are finding that what's the best way of putting this, that their projects have been put off track by COVID-19 and there are challenges and therefore they need additional funding, or for completely new people who haven't yet received money. And so we're still waiting on a lot of the detail on the Innovate package, just like we're waiting for a lot of the detail on the Future Fund. But I'm happy to take questions on that at the end and explain a little bit more about exactly what we know and what we don't know. So the Future Fund itself, as I said, like what we're looking at is something that allows a one-to-one matching investment with a private investor through a convertible loan note structure, allowing startups to access between 125,000 and 5 million of matching funds from the government to match private money that would line up. The conversion rate is a 20% discount to your next qualifying round, and we're hoping that the scheme will be operational in May. Now, like we've seen a lot of challenges that come along with this fund. So I want to talk a little bit about some of the critiques, some of the challenges, and explain a little bit about where I think they are right, where I think they're wrong, and what we need to do to remedy them. So the 4 broad questions about the fund is, the first one is that the £250 million is too small an amount of money, frankly. And so I completely agree. It's the first thing to say. We know that there's going to be a lot more money required. But we're quite optimistic, actually, that this will be the opposite of the government CBILS scheme, where in the CBILS they announced 330 billion in loan guarantees, and then the money simply hasn't got out of the door. Whereas bizarrely, actually, if you announce a smaller pot of money and then you use it up, there's a much stronger case that we're able to ensure that more money is put in. So whilst that's true in the sort of initial quantum, and we're hopeful that if the scheme is effective, the government will be willing to support with additional capital. The second is that the Future Fund isn't EIS and SEIS compliant. Now, we've seen this sort of conversation ongoing, and I think the main thing to emphasize is this is very much still under discussion. Okay, so like the government is working at the moment, I know they're working very hard because I've spent a lot of time engaging with them about it and trying to suggest solutions to make sure that EIS eligible investments will be able to use as matching investments. And so like, whilst at the moment, like there is uncertainty on that point, that is still something that is being worked through and clarified. So it is not, it is not confirmed one way or another that it will either be EIS eligible or not EIS eligible. The third is that the 250K minimum raise threshold is too high. And, first of all, like I completely agree. So like at Coadec, when we were engaging with the government through this process, we were clear that that number should be £100,000. Like ultimately, that was a policy battle that where the government took a decision, and their decision was £250,000. But I want to talk a little bit about where, what schemes will be available to those below that threshold, and whether or not they're perfect, but what is available. But we're well aware that that is a challenge, and I think that cuts to one of the broader points, which is the idea that because of the lack of EIS compliance, and that means that a wide range of investors outside of the sort of top tier VCs aren't necessarily able to put funding in, and because of the 250 minimum raise, we're not like, what does it mean for the diversity and the broad range of founders that are able to access the scheme? And I think these are really important points, and that's precisely why things like EIS compliance and the ability of a wide range of investors to access the scheme is so important, to ensure that that diversity point is completely landed and we make sure we're able to get access to the scheme for a diverse range of founders. And then the fourth point is, and we've heard this time and again, is that the terms themselves of the scheme are too onerous. That the funding being offered isn't something that founders would want to take. And to be totally blunt about it, that's where I depart from the critiques of the scheme. Where, I mean, I think to be candid, like one of the challenges that we've seen as part of this broader process is that the initiatives that the government launched last Monday for the startup ecosystem are the first time that the government has launched any additional support of including new capital from the Treasury for any sector of the economy. And so it is, and I think it's sort of important to see the scheme and the support being offered in the context of the fact that it is a government bailout. And so, there are things like the scheme will accrue at 8% interest, which is punchy for a private investor, but ultimately is not without outside the bounds of normality. The fact that you'll have to pay a redemption premium if you want to repay the loan instead of having to convert, and again that's intended to be structured to protect the government. And like I said, I am sympathetic to founders who are put in the position of having to take this capital, but ultimately it is capital of last resort, and that's intentionally how it's structured. Because if you can go and raise private capital from elsewhere, you should be encouraged to do so. And if there's private investors who want to invest in you on terms that are preferable to the terms of the fund itself, then you're absolutely free to go out and seek that. So that's the four broad questions about the fund, and then I want to talk a little bit about who this is for, because I think this has also been a little bit lost. Look, so this is suitable for seed stage companies and beyond. So we know because realistically of the £250,000 who've raised external financing, and it's designed specifically for loss-making companies in that category. So if you're bootstrapped and profitable, the honest answer is this scheme is not designed for you. Like that is not how the government has been thinking about it. And the reason why they've structured it that way is because they thought about it in the context of what slipped through the gaps of the CBIL scheme. And in their mind, if you are profitable and therefore able to access the CBIL scheme, then you should apply for the CBILS loans. That is the attitude of the Treasury. Now, that is not a perfect solution, and that would not be our preference, but that is the way in which the government has thought about this scheme, and so that's why they've targeted this cohort. Then the second point is, it's clearly not suitable for super early stage, loss-making or pre-revenue businesses, so the people who haven't raised that £250,000 of external investment. And we know that that's a big problem. Like I said, we were arguing for that to be lower, but we're hopeful that a combination of different measures will be helpful in that regard. So the first is the Innovate UK, additional Innovate UK money, which will come in the form of pure grants, so you won't necessarily have to get matching funding. And we're hopeful that more progress will be announced on that in due course. But also the new so-called bounce back loans that came on Monday will take off the bootstrap companies in that category. So if you're not able to access the full CBILS, you'll be able to do that. But we know that like really, really early stage loss-making or pre-revenue company is a gap in the support available at the moment. And we're pushing the government to provide additional support where we can. So then what are these alternatives? What do they look like? So the bounce back loans are access to loans worth up to 25% of the startup's turnover. So like I said, it works for bootstrapped and profit generating companies, up to a maximum of £50,000. And the government guarantees 100% of the loans, unlike CBILS where they only guarantee 80%. And so the idea is that the lenders will be pushing money out of the door much quicker, and that companies should be able to access the cash within days. Now, this is still being worked through, as in we expect the scheme will launch very soon. But obviously, we've seen the challenges of the CBILS, and we're very cognizant that there are going to be challenges probably here as well. So it's really, really important to get the feedback as soon as we can on what works and what doesn't, so we can make sure that the government can remedy that as best possible, because we know that there are going to be issues in making sure that startups can access that cash. The second is the Innovate UK funding, as I said, which is allocated essentially. There's another 550 million for new customers or new projects that are being dished out by Innovate. And so for those R&D intensive, super early stage, loss-making, pre-revenue companies, this is probably the best route to go in terms of potential support. So that's the gist. That's the sort of broad summary. I'm more than happy to take any questions about the specifics of the Future Fund itself, which I can be totally honest about what we know, what we don't know, etc. But also more broadly the support package available, and a little bit about my conversations with the government about it. So I'll turn off the